Gerardo Gutiérrez-Olvera, Executive Director and Head of Trade, Finance and International Business at Banorte. I'm Vice Chair of ICC Global Banking Commission. I've been working in banking for close to 30 years, with a broad experience in North America, in Latin America, in Asia and Europe, working for international banks. And for the last 10 years, I've been heading the trade and supply chain finance business of Banorte, the strong bank of Mexico.
How can Mexican banks better support SMEs and independent traders facing higher payment risks, given their heavy reliance on U.S. open account trade?
This is actually a great question for an event like BAFT. Because what we've been trying, the way in which Banorte has been trying to position itself and has been successful in doing so is by approaching correspondent partner banks in the US mainly because of our trade flows, and show them that we are a local bank, very close with the companies that do business abroad, and very close even with the owners of them. And that has given us a unique opportunity to work together with regional and local banks in the US and Canada in order to serve better our clients.
How do banks assess the risk-reward balance for businesses in Mexico?
It's that's also a very good question, because at the end of the day, we have hard evidence that trade and supply chain finance is a high-quality asset. It's been there. There is data that goes back to almost 15 years, data by the ICC Banking Commission and the Trade Register that can show that trade and supply chain finance is a high quality asset. So what we're doing is we're trying to utilize more these kind of tools and these kind of techniques in order to finance some of our clients. Keep in mind that if you consider exports and imports, that accounts for almost 75% of Mexican GDP. So any bank financing anything in Mexico is already financing trade finance. It's just a matter of seeing how we can equilibrate the risk-reward balance, and trying to leverage on the fact that our main partner in terms of trade loans is the U.S., and therefore we can try to leverage on that and the better quality of some of the clients of our clients.
How have Trump's tariffs impacted Mexican businesses and banking relations?
I mean, I guess at this point in time, the only certain thing is uncertainty. No, we really don't know where this all is going to end up. What we know is what happened during the first Trump administration. President Trump, with the implementation of USMCA, was in reality a blessing in disguise for Mexico. At the end, rules were clearer. The trade between Mexico and the US and Canada grew stronger, much more integrated. This is much more a matter of not so much what is the commercial balance between our three countries. No, this is a matter of strengthening the North American region and making it more competitive against other nations that maybe are not market oriented or market driven, and therefore we need to be able to combine our strengths.
If you could change one thing on trade finance in Central America, what would it be?
I would probably have to say inclusion, and inclusion is a broad word. Inclusion, I mean making trade finance available for everyone. Inclusion is very relevant in terms of educating clients, educating financial system, making sure that we don't overbank certain clients that are already immersed in trade finance flows, but the other way around.
Awesome. So we're here at day 2 of the BAFT conference in Washington, D.C. What's been your main takeaway from the event so far, the meetings that you've had, what you're hearing from everybody around?
I see opportunity. If you ask me, what do I see most, is opportunity. I see some of the banks, especially the U.S. and Canadian banks that we have met with, we concur in one thing. So far, we have not seen anything that worries us to extreme. But right now, I would say, be close to our clients, see what they need to go through this period. Partner up. It's very important that local banks in the U.S. and local banks in Mexico and other countries partner up to see how we can go around this, because the clients are having to modify their working capital needs, their OPEX needs. Some of the CAPEX projects are being put on hold. So we need to be very close to our clients to know what's going on.